All right, let's get right into it here. Looking at the Spider 65-minute chart, and let's try to figure out what we can expect going into this week here. Obviously, when we woke up and entered the market, as we can see, the market has gapped down this morning. Just below the micro term and the short term there, we've seen that before. It seems like the gap down after a little bit of move seems to be kind of a trend here. So you can see we've seen there's a gap down right here. There's a gap down here, and there's a gap down here. So it tends to gap down just beneath the micro term. You see that micro term, and you see that micro term, and you see that micro term. Because of that micro term, and when it holds, as you can see, since early February for like 2 weeks straight. The micro term continues to act as support. So it looks as though bears realize that micro term, it continues to just the way the market has been moving here in the last 3 months and a half, very much a lot of buying pressure. And this only way to sort of like kill that momentum, at least in the micro term, is a down gap, right? Gapping down. Because right now, bears cannot battle with the micro term, because every time when they do, it just acts as support, right? So only time when it gotten below the micro term in the month of February, it was a gap down, right? A down gap. That's the only way. That's the only way bears can avoid battling with the micro term support, and then could have any sort of downturn, right? Again, there's a micro term there. There's just right on that micro term, on Friday at close. So as you can see, we're now back below the micro term and the short term, which we've seen just last week. As you can see here on Valentine's Day, we got below the micro term and the short term. Micro term is aqua, short term is the green color there. However, bulls brought it back up and reclaimed the short term and the micro term, and this gap was not fully filled, right? We can agree that there's a still very small portion of that down or up gap remaining, right? If you've been following me long enough, you understand that when the gap is not fully filled, it's gonna favor, in this case, the buyers, because it was an up gap. That's why it's important, it's imperative. When we saw that up gap, and when the bears were bringing it down, right? And if bears want to make this into a trap, a head fake before plunging back down, that gap needed to be fully filled, right? Below the short term and micro term. And when the gap gets filled, it's going to act as support. So you will see a short term movement, and then it would act as resistance, and then it will fall back down. That's what you normally see if this up gap was going to be at that head fake bull trap before going back down. However, when bears were not able to fill the entirety, again, they left a little bit here. You see it. And then you see how bulls turned it into a hammer-like candle. And then it propped itself up, utilizing the short term and micro term as new support. Again, this is the process when the bulls reclaim the micro term and the short term. Why am I talking about this? Because if we do, because we're right on this inflection point, right? We're just right on the micro term, and then we're right on the short term. And we do have that, what it looks to be a hammer candle there, just right on the micro term here. And we got short term here. So if we do see a follow through to the upside tomorrow, because again, you see the hammer-like candle here and hammer-like candle here. Perfect. Right? When you see a follow through, and that hammer could be something. But without the follow through, it could mean nothing, right? So what I said was about these moving averages. Remember, if these moving averages were gonna be supporting the sellers, then it would have been acting as resistance, right? Another thing is, even this morning on the 3rd hour, that down gap or that up gap is still not filled.
Perfect.
You can see that up gap is still not fully filled, and this is gonna cost bears if we do see a follow through to the upside, because this up gap was not fully filled today. Unless, of course, bears, use these moving averages as new resistance, and we see a downturn, and bears gonna go at it one more time to fill the entirety of it, right? But if we do see a follow through, and if we do see this market reclaiming the micro term and the short term, you want to pay attention, very, very close attention to how it behaves with that micro term and short term tomorrow, throughout the day tomorrow. So the oscillator, if we go back, and this is the vicinity here, we can see that's oversold, that's oversold, that's oversold, and that's oversold. You see these runs, right? You see how wide the space in between, like when it hits the oversold and then going back up to the top of its band and coming back. There's some time in it, maybe a week or so. This week or 2 weeks or something like that. This, you can see that gap or that space in between before getting oversold to overbought, coming back down to oversold. It gets shallower and shallower. That could be a concerning signal.
Huh?
And you might be wondering if this double top is actually going to play out.
Huh?
Right? And that's the neckline at 431. And coincidentally, as you can see, the neckline is currently, right, coinciding with my long-term moving average. My midterm is around 433, 493. My long-term is 491.24. And this long-term MA has not been retested since sort of mid to late January. So it's been exactly a month since this long-term moving average has been retested, which is coinciding with the neckline of this double top pattern. So this is actually a tricky spot here, right? Yes, we do have the oscillator at oversold, but we don't see like a cross to the upside yet. We are seeing a little bit of pop there on the last 2 hours or so today, but we're still underneath the micro term and short term. So really needs a follow through. And obviously this down gap still remains. And if bears want to put any kind of pressure, what bears need to do, make sure this up gap or down gap from this morning, as long as this down gap is remain unfilled, if this down gap is sustained, it doesn't matter what happens to the moving averages, as long as the down gap remains, bears can still bring it down. So this down gap is going to be obviously the key area or key level to watch this week, because the fate of this market, probably for the entire of the remainder of this month, is it's going to rely on this down gap, whether this down gap is going to be filled or not filled, right? So this is a tricky spot here, I think. Market, obviously, in overall sense, we're still in a very much bullish uptrend if we look at the midterm and the long term. But we're at that inflection point where market could potentially preparing to see maybe steeper correction based on how this market behaves right here with this down gap, and how this market treats this down gap, and how it's going to behave in this vicinity of potential support levels. I'm going to come back for you. We'll reassess the situ Asian. Enjoy your evening. Let's train tomorrow.